Good morning. Welcome to E-mini Futures by Sell.com, 2nd of September 2017. This is Aya welcoming you. A legal disclaimer. We've been doing exceptionally well with swing trading signals and catapult, but that's just a observation. The subject of this video is why forex traders and futures traders lose money in trading, and I'll also end the video with a positive, guide or help or answer how you can start winning from here on. So this is a very important video that you should pay attention. To highlight the problem why futures and forex traders are losing money constantly, I'm going to show you a chart of US dollar, Canadian dollar on MetaTrader 4. This applies though, even though it's a currency, the same logic applies for commodities, or like commodities like oil or S&P 500. There is a fundamental problem which traders are not appreciating or understanding, and that's why traders are constantly losing money. So let's say you're sitting for an Harvard MBA entrance exam, and this is a question given to you. So if you answer this question correctly, you get admitted. So how are you going to answer to get into an MBA in Harvard? So here is the answer. The standard approach, or what traders do, they look at a chart, and the broad subject of technical analysis. There are various indicators, moving averages, Fibonacci, pitchforks, support and resistance. If you're a student of online trading academy, they keep talking about demand and supply, higher high, rally based rally, drop based drop, and curve, all those things, right? So under this whole family of chart patterns and technical analysis, what traders do is they study the patterns, the various setups in a chart, and then they extrapolate and try to predict the future based on the patterns and setups and the ideas and tools which are under the family or subject of technical analysis. Now, what is wrong with this? What is wrong with this they fail to appreciate is two things. Number one, all charts reflect what has happened in the past. There is no chart in this world which is going to tell you what will happen in the future. Now, some traders, and I really laugh at this statement, they say that we have a leading indicator, as if they can predict what will happen 2 weeks from now. There is no such thing as a leading indicator. All indicators can only reflect what has happened till now. Now, when they say leading indicator constantly, what they are basically trying to say is this indicator, based on what happened in the past, is predicting this and this will happen in the future. So that's what they mean by a leading indicator. But what they are not telling you is that so-called leading indicator is again using the past data to extrapolate the future. This is very important for you to understand the logic. Look, for example, when online trading academy, people pay 10,000, $50,000 to become a student of online trading academy. When they have this concept of drop based drop and rally based rally and demand and supply, again they are doing the same thing. What they are saying is, in the past there was a lot of supply or resistance, or what, they don't say resistance, they say supply. There was a lot of demand sitting there, let's say USD CAD, and buyers, as if buyers are hiding in the bush waiting to buy again. Okay. And there was a lot of demand, and the market went up from here. Therefore, if USD CAD comes down, there is a probability or a chance that USD CAD will go up. So, in other words, again, they are doing the same mistake which other traders do. That is, they are saying, based on what happened in the order flow, in the order activity in the past, if the market comes to a particular level, the same thing will repeat again. So you see, there is a fundamental flaw in this thought pattern, and this is what I want you to highlight. This is the reason why forex and futures traders lose money consistently, including online trading academy and all those schools, is because they are doing the decision making or analysis based on past data and trying to extrapolate the future. This answer will not get you admission into Harvard MBA. This you tell this to a Harvard MBA professor or a Wharton professor, they'll laugh at you. They'll throw you out. Okay, that I'm going to predict the future based on what happened in the past. That's not the way to do it. That's illogical and irrational. And let me explain to you. Technical analysis or chart patterns or chart setups, they are useful. Don't get me wrong, they have a role in play, they have a role to play, and they are important, but that's not the only determining factor what happens to a currency or a future or a stock in the, there are other important variables, drivers, which are determining how the US dollar, Canadian dollar will move. So I'll give an example. On this week, I gave a signal on 31st of August to short USD CAD to my swing trading clients. And even though the USD CAD was coming into a major support, I said short this currency, and USD CAD went down. I made very good money, and that was a successful trade. So according to support and technical analysis, I should not have been shorting. I should have been looking to buy, because if you do curve analysis in the higher time frame, you should be looking to buy. So all this is, why did I do that? And the answer is, I'm not looking only at technical analysis. There is another big subject called fundamental analysis, and that's very important or equally important. And this is the reason, and this is the reason why futures traders and forex traders are consistently losing money, because all these trading universities like online trading academy and other schools are preaching a fallacious, illogical, irrational idea that just by focusing on charts and what happened in the past, you can predict the future. That's not true. That they do play a role, no doubt. Technical analysis do play a role. I'm not trying to, poo-poo the concept. I'm saying that they only play a 50% role. Equally important is the subject of fundamental analysis. In the future, there are certain important policy events or certain events take place, and they control the future and destiny of a particular currency or a stock or a future. So taking the example of USD CAD, this week on Thursday, one of the days, the Canadian GDP data came out. And there, the GDP data came out with blowout numbers, meaning the Canadian economy gave a phenomenal performance. And that really, the annualized GDP growth was about 4.3%. That really shocked and surprised the entire world, including Canada. So another important thing is, if you look at the future, the Canadian dollar, on 6th of September, the Bank of Canada is going to announce a policy decision. That is, they probably will increase the interest rate. So based on what happened, the blowout GDP numbers, and considering that on 6th of September, there is a BOC policy meeting is there, what do you think logically the traders and speculators will do? They will obviously purchase Canadian dollar, and they will go along the Canadian dollar. That's logical, right? So no wonder USD CAD went down, broke the support, and I also, no wonder, that was the logic of my decision. Why I gave a short in the USD CAD, new trade alert short USD CAD, and why was I successful? I was not successful because I was lucky. No, the logic, I used the logic. Yeah, I was looking at the chart pattern like all the other traders, my fellow traders in the world. But then when I saw the Canadian GDP blowout numbers, I was able to anticipate and quickly figure out that speculators and traders will jump and buy the Canadian dollar, and therefore USD CAD will go down. So I had a logic, a rationale, and that's why I gave the trade. So if you give an answer like this when you're sitting for an MBA exam in Harvard and Stanford, you will pass the exam. A Harvard professor will be impressed with an answer like this. If you say that, listen, I do look at the chart patterns and technicals and analyze, but I also wait for key policy announcements and decisions. And based on what the data comes out, then I combine the fundamental analysis with the technicals, and then I make my decision. That's a logical answer. That's a rational answer. That way, I'm not poo pooing technical analysis. I'm saying technical analysis is important, but equally important is fundamental analysis. You have to analyze news events, you have to analyze what is happening, and then combine that with the chart patterns, and then make a logical prediction that will bring you success, long term success. And this is the reason why traders, futures and forex traders, are consistently losing money, because they bury their head in the sand. They bury their head in this family of charts and technical analysis and refuse to recognize that future events are controlling the destiny of the different markets. Now, what I have done here in this Excel sheet is, in Forex Factory, you have what are called as high impact events. So that's why these are all in red. So in the month of September, in the coming month, this is how you should be trading. So let me give an example of Australian dollar. Australian dollar, AUD, USD on 5th of September, there is a policy rate news is there, GDP is there. 6th of September, retail sales. 8th of September, RBI governor. So plan in advance. What are the important key policy events for that currency for the whole month of September? Because that will do two things. On the day of 5th of September, based on what the Australian Reserve Bank of Australia, the central bank, takes a monetary policy decision on the rate, which will affect the currency and the GDP data, two things can happen. The prevailing trend on Australian dollar, USD dollar, will, based on what happens on 5th of September, can can go in the same direction. So if AUD USD is on a buy, currently it is on a buy, it may accentuate the trade and there could be a momentum further to the upside. But equally, if the rate decision in the GDP data can go against a long position on AUD USD, if that happens, then the currency will tank and will go down. So nobody can predict the future. Nobody can, unless you have personal access to the mobile phone number of the RBA governor and you are a friend of him. He's not going to tell you what he's going to do. Not only that, after these decisions are announced, how the market participants and traders in the currency market will react to the Reserve Bank of Australia rate decision, how they will react to the GDP data, nobody knows. You cannot predict. You cannot predict the whole world of traders how they will respond. So the what is the logical way? The logical way is, if you are in a trade in AUD USD, you should close your trade before 5th of September. That is logical. By 4th of September, you should flatten the position. This also answers the question. A lot of people know, how long should I hold the trade, where I should take profit. All the traders are asking where I should put stop loss, where I should take profit. Here is the answer. On 4th of September, if you are in a trade, you should take profit, because on 5th of September there'll be suicide if you hold a trade and there is a big meeting and the market goes the other way. Now, if you say, you know what, I'm going to ignore the news, I'll simply hold on the trades. Who knows the future? Maybe the news will come in my favor. Maybe the news will go. That's such an absurd and illogical and irrational answer. You give an answer, the Harvard MBA, you will fail. They'll throw you out. That's a totally low IQ, dumb, stupid answer, which many traders tell me, I don't care about the news. Everything is reflected in the chart. A trade can go in. That's such so silly. I mean, that's a low IQ answer. That's not the way to do it. The logical answer is wait and see what the decisions are coming. See, that's how I did. And USD CAD, I waited for the GDP blowout numbers. I saw what the analysis and the commentary. These days, in all the television channels, whenever these big news even, they analyze everything to death. So I waited for all the experts to analyze it, and they were saying that Canadian dollar will go up. USD, they clearly gave the answer. I mean, I didn't have to do any work. I just, made use of it. You just have to be smart. That's all. So and see how the market is reacting to all this news. Then you open a new position in the AUD USD. But keep in mind, on 6th of September, there is a retail sales within 24 hours. That is also a high impact event which will affect the AUD USD. So if you ask me, the intelligent way is not to take a trade